Ever use a microwave?
Of course.
Or flown on a plane that uses radar?
Yeah.
You might have Raytheon to thank for that.
Interesting.
Their tech is everywhere. And today, we're taking a deep dive into Raytheon, now part of RTX Corporation.
Okay, so where are we getting our info from?
We'll be looking at Wikipedia and Zacks Investment Research.
Sounds good. So let's get into it.
The goal today is to understand not just what this company does, but also if it's worth adding to your investment portfolio.
It's a pretty fascinating story.
Yeah.
Founded in 1922, Raytheon started with refrigeration.
Refrigeration.
Yeah, but get this, they quickly pivoted to electronics.
What caused that?
It all started with a star.
A star.
Well, their first product was the Raytheon tube, named after a star, and it was a game changer for early radios.
Wow.
Then World War II happened, and their trajectory changed dramatically.
How so?
Raytheon became a major player in the Allied victory, producing a staggering 80% of all magnetrons.
Magnetrons.
Yeah, the technology at the heart of radar systems.
Interesting.
It's a prime example of how necessity breeds innovation.
Right.
And Raytheon kept going post-war, pioneering guided missiles, even developing the microwave oven.
Really? They invented the microwave?
Yep, and they even made strides in early computing.
Wow, I had no idea.
They've also acquired some big names over the years.
Like who?
Well, companies like Beechcraft, Hughes Aircraft, and Amana.
That's quite a diverse portfolio.
It really shows how their reach has expanded over time.
So let's fast forward to today.
Okay.
Raytheon, through mergers, is now part of RTX Corporation.
So what's the outlook for RTX?
Well, Zacks gives it a hold rating.
Hold.
Yeah, meaning the stock might be fairly valued right now. They do see potential for short-term gains, though,
Why is that?
because there's a chance the stock is currently undervalued.
I see. But what about the long-term growth prospects?
Zacks seems less certain about that.
Okay, so to understand this better, we need to know what RTX actually does now, right? What are they working on these days?
RTX operates across 5 main divisions:
Okay, what are they?
integrated defense systems, intelligence, information and services, missile systems, space and airborne systems, and Force Point.
Force Point. What's that?
They specialize in cybersecurity.
Got it. So still a lot of defense-related work.
Definitely think air traffic control systems, radars for advanced aircraft,
What kind of aircraft?
like the F-22 and the B-2.
Those are some serious planes.
They also work on satellite sensors,
Interesting. What are those used for?
both national security and weather forecasting.
So it's not just weapons systems.
Not at all.
Given their involvement in critical areas, how is their market share?
They're a giant in the defense sector, for sure.
But are they facing any competition?
Oh, absolutely. Companies like Lockheed Martin and Boeing are big competitors.
So securing government contracts must be crucial.
It's paramount in this sector.
Which means?
It brings both opportunities and vulnerabilities.
Right. Relying on government funding can be risky. What about Raytheon's or RTX's now innovation pipeline?
Are they staying ahead of the curve?
Yeah, are they adapting and evolving?
They're constantly developing new technologies.
Right, that's all.
As we said, that dependence on government funding can make them vulnerable.
Vulnerable how?
They're susceptible to shifts in political priorities and budget allocations.
Makes sense. And haven't they been on a bit of an acquisition spree lately?
They have.
Which raises questions about their ability to integrate all those companies, right?
Exactly. They've acquired quite a few companies.
Like which ones?
Well, for example, Beechcraft and Hughes Aircraft.
And what's the challenge there?
Integrating these massive entities effectively,
Because if they don't,
it could impact their success.
right, smooth integration is key to realizing the full potential of those acquisitions.
Now, let's shift gears to their financial performance.
All right, let's look at the numbers.
What are some key insights from their recent performance?
Well, as of December 2014, the top 10 institutional shareholders were a mix of prominent investment firms. Wellington Management Company, Vanguard Group, State Street Corporation,
Okay, those are some big names.
also Barrow, Hanley, Mewini and Strauss, BlackRock Institutional Trust Company, BlackRock Advisors,
Wow,
Bank of America, Bank of New York Mellon, Deutsche Bank, and Macquarie Group.
that's quite an impressive lineup of stakeholders.
It is.
But to give some further context, what about Raytheon's revenue and net income?
How have those been trending over the past decade?
Exactly.
Well, in 2017, for example, Raytheon, before the merger, reported earnings of $2.024 billion
Okay.
and an annual revenue of $25.348 billion.
So what does that tell us?
This represented a 5.1% increase in revenue from the previous year.
So they were experiencing healthy growth.
It seems so, yes.
And before merging with United Technologies to form Raytheon Technologies, how was their stock performing?
You mean before that became RTX Corporation in 2023? In November 2018, Raytheon's shares were trading at over $164 per share,
Wow, and
with a market capitalization valued at over 51.7 billion US dollars.
market capitalization.
Yeah, it's the total value of all a company's outstanding shares.
So basically the company's worth in the stock market.
Exactly.
Okay, that's
What's the
helpful.
problem?
And of course, for potential investors, what about their dividend policy and share buybacks?
Yeah, those are important factors to consider.
Do we have any information on that?
Unfortunately, the sources we have don't offer specifics.
So no details on RTX's dividend policy or their approach to share buybacks.
Right.
That's something investors would need to research further.
Definitely. They'd need to dig into their investor relations materials.
Now, let's move on to ESG factors.
Okay, environmental, social, and governance practices.
How does RTX measure up in those areas?
It's a bit of a mixed bag, actually.
How so?
Well, they've been recognized for environmental sustainability efforts.
What?
For example, they received the EPA's Goal Achievement Award in 2013.
What was that for?
Excellence in greenhouse gas management.
That's certainly commendable,
It is.
but it's important to look at the bigger picture, right?
Absolutely.
Have they faced any challenges or controversies when it comes to their environmental impact?
There have been some legal issues, yeah.
What kind of legal issues?
Well, relating to contamination at a few of their manufacturing sites.
Oh,
For instance, in 2008, a Raytheon plant in St. Petersburg, Florida, faced lawsuits.
what were the lawsuits about?
Concerns about contaminants found in the groundwater.
That's a serious issue.
And then there's the Tucson, Arizona plant.
What happened there?
The EPA ordered Raytheon to address groundwater contamination there as well.
And what was the source of the contamination?
This plant, acquired through the Hughes aircraft merger, had a history of using and disposing of various substances that raised environmental concerns.
So the merger brought with it some environmental baggage.
You could say that.
Okay, so we've talked about the E in ESG. What about the S and the G?
What about social responsibility and governance?
Right.
Well, in terms of social responsibility, one incident that stands out is the protest at the Stream Contact Center.
Where was that?
It was in Derry, Northern Ireland.
And what happened?
This center, which had a contract with Raytheon, was significantly damaged and occupied.
Occupied. By who?
Activists protesting Raytheon's involvement in the arms industry.
So they were targeted because of their connection to Raytheon.
Exactly. It really highlights the ethical complexities of the defense sector.
And on the governance front, haven't there been some recent legal issues?
Yeah, some concerning incidents have come to light.
Like what?
In August 2024, RTX agreed to pay a substantial fine.
How substantial?
$200 million.
Wow. What was the fine for?
Unauthorized exports of defense technology.
Oh, that's serious.
This sensitive technology ended up in various countries, including China, Russia, and Iran.
So a significant breach of export control regulations.
Definitely a major issue.
And were there any other incidents related to governance and ethical conduct?
Unfortunately, yes.
What happened?
Just a few months later, in October 2024, RTX agreed to pay almost $1 billion to settle allegations.
Allegations of what?
Defrauding the U.S. Department of Defense and engaging in bribery.
Wow, those are serious accusations.
They are.
So these legal issues, along with the contamination cases, paint a concerning picture of RTX's track record.
It seems that way, yeah.
It's a reminder that evaluating a company goes beyond just financial performance.
Absolutely.
Considering ESG factors gives a more holistic view, right?
It does. It helps assess potential risks and their commitment to responsible practices.
Okay, so there are clearly both pros and cons to investing in RTX.
Definitely a lot to consider.
Let's start by breaking down the key arguments in favor of investing in RTX.
Right, what are the pros?
On the positive side, RTX has a dominant market share in the defense and aerospace sectors.
That's a big plus.
They also have a history of strong financial performance.
Right, we saw that with their revenue growth.
And they have an innovation pipeline that's constantly pushing boundaries.
Always developing new technologies, that's good.
Plus, their acquisitions, while presenting integration challenges, have expanded their portfolio.
So they're not just reliant on defense contracts anymore.
Exactly, they're involved in commercial aviation and space exploration.
Which could provide some stability if military spending decreases.
Right.
But we also need to acknowledge the potential downsides.
Okay. What are the cons?
The defense industry is inherently sensitive to geopolitical events and government budget decisions.
So a lot of external factors they can't control.
Exactly.
What else?
Competition is fierce, remember?
Right. Lockheed Martin, Boeing, and others are constantly vying for market share,
And those acquisitions, as we discussed, come with integration risks.
potentially impacting their financial performance and operational efficiency.
And let's not forget their recent legal troubles.
Those are definitely a red flag.
They could damage their reputation and lead to further penalties.
So with RTX, it really depends on an individual's risk tolerance, right?
And their investment goals.
Would you agree with that?
Precisely. Investing is not one size fits all.
Each person needs to weigh those rewards against the risks.
And determine if RTX aligns with their investment philosophy.
We've given a broad overview, but further research is always recommended.
Absolutely, before making any investment decisions.
We'll be back after a short break to continue our deep dive into RTX.
It's really important to emphasize that investing in any stock, especially one like RTX, requires careful consideration and due diligence.
Absolutely, we've laid out a lot of information, but ultimately the decision of whether or not to invest in RTX is a personal one.
Right, it's not up to us to tell anyone what to do with their money.
We've explored their history, their diverse operations, financial performance, market positioning, and even delved into those crucial ESG factors.
We've covered a lot of ground.
As we wrap up this deep dive, let's circle back to that initial question. Is RTX stock a good fit for your portfolio?
It's a tough one.
It is,
As we've discussed, RTX operates in sectors known for their growth potential.
but also for their volatility.
Exactly. Geopolitical events, government budgets, global economic conditions all play a role.
Their innovation pipeline seems robust, but that reliance on government contracts adds an element of uncertainty.
And those recent legal issues haven't helped.
No, they've cast a shadow on their ethical conduct and compliance track record.
It's definitely a mixed bag.
For investors seeking exposure to the defense and aerospace industries, RTX might seem appealing.
With their scale and technological prowess.
But those same investors need to be comfortable with the inherent risks.
And the complexities we've outlined.
It all comes down to aligning your investment choices with your risk tolerance and financial goals.
Speaking of which, we touched upon RTX's dividend policy and share buybacks earlier.
But the sources we have don't provide specifics.
Right, no details on their dividend policy or approach to share buybacks.
Where could investors go to find more information on these financial strategies?
RTX's investor relations website would be a good starting point.
What kind of information can they find there?
They typically provide comprehensive financial reports, presentations, and other materials that delve into those aspects.
So for anyone seriously considering adding RTX to their portfolio, a deeper dive into those materials is recommended.
Absolutely, it's essential to do your homework.
Before we wrap up, is there anything else you'd like to add for our listeners? Any final thoughts or insights?
I think the key takeaway here is the importance of thorough research and a balanced perspective.
Don't just get caught up in the hype.
Right, don't just focus on the potential upside. Weigh the pros and cons carefully, consider the long-term outlook, factor in those ESG concerns.
And don't be afraid to seek advice from financial professionals.
Exactly. It's always good to get a second opinion.
Investing is a journey, and it's one best navigated with knowledge and careful consideration.
We hope this deep dive has equipped you with the information you need to make informed decisions about RTX and other potential investments.
And we always encourage our listeners to engage with us.
Yeah, head over to our YouTube comments section and let us know what you think about RTX.
What stood out to you? What questions do you still have?
We'd love to hear your perspectives and continue the conversation.
And while you're there, let us know which companies or stocks you'd like us to explore in future deep dives.
We're always looking for fascinating stories and insightful analyses to share with you.
We appreciate you joining us for this deep dive into RTX Corporation,
It's been an insightful exploration.
highlighting the many factors to consider when evaluating a company like RTX.
We touched upon their financial performance, market dominance, the influence of government contracts, and the importance of ESG factors,
It's clear that RTX operates in a dynamic and often volatile space.
where geopolitical events, technological advancements, and ethical considerations all converge.
And for potential investors, this deep dive has hopefully underscored the need for careful due diligence,
Understanding a company's financials is just one piece of the puzzle.
assessing their market position, growth prospects, and commitment to responsible practices is equally crucial.
We've provided a framework for analysis.
But the ultimate decision of whether or not to invest rests with each individual.
And that decision should be based on a thorough understanding of your own financial goals, your risk tolerance, and your overall investment philosophy.
We encourage you to continue exploring RTX.
Dig deeper into their investor relations materials and form your own conclusions.
We're confident that the knowledge you've gained from this deep dive will serve you well in your investment journey.
And as always, we value your engagement. Head over to our YouTube channel and let us know what you think.
Share your insights, your questions, and your suggestions for future deep dives.
We're always eager to learn from our listeners and explore new avenues together.
Until next time, happy investing. It's been fascinating, hasn't it?
Definitely. RTX is a company with a lot going on.
A long history, a diverse portfolio, and as we've seen, its fair share of complexities.
Lots to think about.
We've explored their financials, their dominance in the market, the impact of government contracts, and the importance of considering those ESG factors.
It's clear they operate in a space where so many things intersect.
Geopolitics, technology, ethics, all playing a role.
And for anyone thinking about investing, this deep dive hopefully highlights the need for, really digging in and doing your research.
Absolutely. Understanding their financials is just one piece of the puzzle.
Right. You've got to assess their market position, their growth potential, and their commitment to responsible practices.
We've given you a framework for analyzing RTX.
But as always, the decision to invest is a personal one.
Based on your own financial goals, risk tolerance, and your overall investment philosophy.
Exactly.
We encourage you to keep learning about RTX.
Yeah, dig into their investor relations materials. Look at what they have to say and form your own conclusions.
We believe the knowledge you've gained here will be valuable as you continue your investment journey.
Absolutely.
And as always, we appreciate your engagement.
Head over to our YouTube channel. Tell us what you think.
Share your insights, any questions you still have, and let us know what companies or stocks you'd like us to explore in future deep dives.
We're always learning from our listeners, and we love exploring new avenues together.
Until next time, happy investing.